Should the world prepare for a prolonged disruption? Warning signs flashing across global markets for a while, with inventories tightening, price pressures building. The bigger question is no longer just about oil. It is about the global economy. Is this a new phase of inflation that the world is not ready for? We break down for you the war tax on everything. Here's what we are talking about.
What we are witnessing is not a routine spike. It's a structural disruption. A key global oil route, the Strait of Hormuz, is now at the center of a major supply shock. Production losses in the Gulf have sharply reduced global availability, while shipments have slowed and inventories are rapidly thinning. The safety buffer that once stabilized oil markets is disappearing, and when energy supply tightens at this scale, the impact doesn't stay limited to oil. It spreads across the entire global economy. This is where the real impact begins and the war tax takes hold. Higher crude prices are already feeding into higher fuel costs, pushing up transportation, logistics, and aviation expenses worldwide. Supply chains still recovering from pandemic disruptions are once again under pressure. For consumers, this translates into rising food prices, higher cost of goods, and persistent inflation.
Everywhere in the world, in Asia and Europe, even in the United States, which produces a lot of oil of its own, consumers will feel a massive impact. So to begin with, the peak of the crisis will probably be felt in jet fuel, meaning people will fly less. Everything we're getting at home, from potatoes to furniture, is being delivered by trucks, and there is a shortage of diesel, meaning everything will become more expensive to transport.
For policymakers, the challenge intensifies. Central banks like the Federal Reserve and Reserve Bank of India now face a difficult trade-off, controlling inflation while trying to support growth. The longer this disruption lasts, the deeper the economic impact. Sustained high energy prices act like a tax on the global economy, slowing consumption, squeezing corporate margins, and delaying investments. Even if supply improves later, rebuilding depleted inventories will keep demand elevated and prices under pressure. With $150 oil turning into a real possibility, wallets across the world are set to feel the impact. Business Bureau, WION World is One.